Okay, folks, slightly past 5 o'clock, so let's get started. Hello, good evening, everybody. My name is Rod Escayola, and I'm your condominium lawyer with Gowling WLG, and welcome to the April edition of the monthly Condo Advisor webinar. This month, we decided to take a deep dive on condo insurance. So that's a pretty packed agenda we got. We're going to talk about how the insurance works in the condo world. We will be talking about the various industry trends. What do we expect around the corner? We'll be focusing on who pays for what. And of course, we're going to talk about insurance deductible bylaws, standard unit bylaws, and how they can help you. And on that last topic, you'll see there'll be a heated discussion here. So lots to cover. And in fact, it must be a pretty popular topic because we were flooded, pardon the pun, with registrations.
Oh,
And so I know I couldn't resist. That's bad. I think it's probably the single most complicated condominium issue that there is out there. And tonight I hope we'll be able to crack the black box open and see what's inside. Okay, now at the end of this meeting, what I'm going to do is, in the interest of time, I want to share with you folks at home the results of our survey on insurance. But I didn't want to spend too much time on it during the webinar. So we'll do this at the very end, but you'll be able to compare with other corporations, your premiums, your deductibles. How does it compare by condo size, by number of units, by regions? And so we'll be sharing some slides at right after this webinar for those of you who can stick around. Okay, now I told you at the beginning of this year that I would spice things up. I would keep changing the speakers. I like to try to share the microphone and the stage with other people. So today, most of the usual crew that you've come to love is taking a break, and they'll be back next month. But for now, I got you an amazing crew. So I've asked them to introduce them to you. I've asked them what was their dream job as a kid. And so the first one, and then you'll get to see where they landed now. The first one wanted to be an astronaut until she realized that she didn't like confined spaces. And so I bring to you Trisha Barada. She's with Gallagher Insurance. Hi, Trisha. How's it going? I think you're still muted.
thanks for having me. Hello.
Hello, hello. And oh, I'm very happy about this next one. I've always wanted to have a condominium director on the panel here. And so I found one and a good one. He's with OCSCC 882. He wanted to be a lifeguard. And so we have here Chuck Davies. Hello, Chuck. How's it going?
I'm doing well, thank you.
And we have someone who wanted to be a phys ed teacher or the first female sportscaster. She's with First Service Residential, Stacy Kirk. Hi, Stacy.
Rod, thanks for the invite.
Hey, no problem. And of course, your favorite condo twins. We have one who wanted to be a king and the other one who wanted to do TV. And I wish we could just poll people to see who, if you can guess, who wanted to be the king and who wanted to do TV. So Graham Macpherson wanted to be the king. How's it going, Graham?
Oh, it's good. Still working on that. Every day is just a stepping stone to greatness.
Nice. And David just realized today that he actually made his, you made it, David. You're doing TV online.
I've reached the pinnacle of my career. It's all downhill from here.
Look at that. Okay, so folks, I see the chat line is already lighting up. If you want to make sure that everybody else sees your comment, make sure that you select to all panelists and attendees. If you only select to all panelists, only we get to see it. But if you want to get involved in the discussion, make sure you click on all panelists and attendees. Housekeeping before we jump in, your usual favorite disclaimer. So whenever we refer to legislation during this webinar, we're referring to Ontario legislation. The information we're providing you is as up to date and as accurate as we can possibly make it to be, but this is as of April 7th. So keep this in mind if you watch this on demand later on. Most importantly, keep in mind that the information we provide you here today is information. It's not legal advice. And so you need to. I mean, it's useful, but if you have a specific question, you should really turn to the experts, either your condo lawyer, your condo engineers, your property manager, and ask them to find answers to your very specific situation. As usual, we will upload this webinar on the Condo Advisor website. You'll be able to watch it on demand later on. You can access our past webinars by clicking on the webinar tab at the top of the Condo Advisor blog. It usually takes me about 7 days to upload it, so be kind and patient with me. And what else? Did I say everything I needed to do? I think I did. Okay. We behind schedule? We are behind schedule already. The first thing we're going to do is, oh, I always forget to put the names of whoever I introduce. Sorry about that. And that's the agenda. The first topic that sort of snuck its way in today was the various announcements made by the province, one effective April 1st and one effective April 8th. Graham, give us a 2-minute summary of what took place this afternoon and last week.
So this afternoon, the order was made that we would be going back into a state of emergency and subject to a stay-at-home order again, very similar to what happened at the end of the Christmas holidays. So I mean, basically just stay home harder. Unless it's for an essential reason, we're all asked to stay home. Non-essential stores have been closed except for curbside pickup. The big box stores are only selling essential supplies like your medicine, your groceries, etc. And residential evictions have been suspended. So this is more something that probably pertains to condo dwellers more than the condominium corporations themselves. But you know what? Hey, it's a COVID update that happened today. We're not going to not include it.
Okay, and what about what took place last week, the shutdown restrictions? Can you summarize them quickly?
So the shutdown restrictions were essentially just a province-wide. So I mean, usually our advice has been to look at what province you're in, see what color you are, and figure out what your recommendations and restrictions are based on that. But this one was a province-wide quote unquote shutdown, which is essentially put restrictions across the entire province as a blanket. So nothing major that most health sectors weren't already doing. You got to wear masks. For condos, you've got to make sure that any workers who come in are getting screened for COVID, and anybody else who comes in is being invited to self-screen. No indoor organized events, and outdoor organized events are to a maximum of 5 people. So that pretty much means that your in-person AGMs are still off the table. Your gyms, pools, and rec facilities still have to be closed. Short-term rentals are only available for those who are in need of housing right now, and you should be continuing to clean and disinfect as frequently as you possibly can. And with that one, I'll channel my inner Jason and tell you to make sure you document it.
That's right. Well done. And the list of essential services goes on. It's over multiple pages, but here are the essential services, I guess, Graham, that are condo relevant.
Yeah. So your laundromats, your landscaping, snow clearing. Although these days snow clearing is less of an issue, thankfully. Security, property management, and maintenance and construction. In case you were wondering, Rod, bathhouses are not essential and are closed. Casinos are not essential and are closed. And what else? What else was the other one? Unfortunately, the zoos are closed. So
the zoos are closed, but that condos don't fall in that definition. Okay, so that's sort of the update. And as Graham said, I mean, if you go to your favorite condo blog, hopefully maybe it's ours, we have a COVID tool. You can click on that, then you'll be able to click on the color that applies to your region. Right now, it's all shut down, and these are the restrictions that are applicable until May 3rd, I think, if my math is right. So there it is. That's sort of the lay of the land. And now we can finally, oh, what's this here?
Oh, this is actually another COVID update that is very specific to condos, in that, as many of you will know, if you've listened to past webinars of ours, that the deadline to hold your virtual AGMs or hold virtual board meetings or send virtual notices of AGM to your owners, that was May 31st, 2021, if you didn't have a bylaw. And we had been saying for a long time, we'll see if that gets extended. And it did to December 31st, 2021. So you've got the rest of the year essentially to, if you don't have an e-meeting bylaw in place yet, you can still hold your virtual meetings and you can still hold virtual votes and send the notices by way of email. I mean, we've done a deep dive on bylaws last week and talked about the e-meeting bylaw, so I won't go into it here, but if you don't have it, your deadline has extended.
Okay, so bylaw or no, you can have virtual meetings. You can proceed with electronic voting at least till the end of the year. Wonderful, perfect. Now on to the real topic. The reason why everybody has logged in today. We're going to take our deep dive on condo insurance, and feel free to send your questions. If you want to make sure that we see your question, you should make sure you put it in the Q&A and not in the chat, because in the chat we'll lose sight of it. Lots of material to cover. So Tricia, I'm going to turn to you, and if you can maybe start by helping us understand the various types of insurance that are required for condominium corporations.
Yes, certainly. Hello, everyone. Most importantly, property and liability. And in the next couple slides, we will give you an idea of what property and liability look like, and property and liability separated from unit owner to corporation. Property being the common elements and all of that good stuff. Liability would be third-party bodily injury and property damage, directors and officers. Questions have come up about volunteer insurance. This is questions that corporations have with respect to having volunteers, let's say committee members, do work on the property, and are they covered? Quick answer, depends. Depends on the wording and depends on the work. So always please refer to your broker for questions about volunteers. And should a property manager be named as an insured is a very common question. The answer is no, not named as an insured, but an additional insured, very different. An additional insured, because they don't own the property, but they do work on behalf of the property, they do need a little bit of help in coverage because they can't get coverage for that elsewhere. But as a named insured, they're entitled to 100% of the benefits of the property or of the policy, and they're not an owner, so they should not have that benefit.
Okay.
Premium.
Let me go
sorry,
back
go
to
ahead.
let me go back to volunteer insurance. You mentioned a couple of things that were interesting last week. Something about it depends what's the kind of work that the volunteer will do, and it's got to do with it. It can't be work that requires a certain training or a certain level of expertise. Can you tell me more about this again?
Absolutely. So if you've got a volunteer on, let's say, a gardening committee, they can absolutely dig a hole, plant some annuals. As long as they're wearing the protective safety equipment they need, as long as it's not an activity that requires specific training. So let's say they're going up a ladder, they need working at heights training. So therefore, if someone on your committee should not be cleaning eaves troughs or repairing anything on the roof line. And the difference is they cannot be paid. So as soon as someone is doing work on your property and they are paid, they're considered an employee, and it gets a little muddy. So to make sure anyone that you pay to be on your property doing work has their own liability insurance to look after that, because they likely will not be covered under the condo policy.
Okay, and two sort of building blocks to tonight's presentation: premiums versus deductible. What's the 101 on that?
Sure. Premiums, this is the dollar value at the bottom of your insurance policy. This is what's going to come out of the condominium bank account. And this is the agreed upon amount for the entire policy for the effective year. So for the policy term, the deductible is going to be that first portion of the claim payout that is not covered by the policy. And this will be different for every policy, every coverage type, property, liability, sewer backup. All of these will have different deductible values, but this is the amount of the claim that the corporation in this case would be responsible to pay out in the event of a claim.
Okay, so that's the first portion of the claim that's never paid by the insurer. It's you're going to have to pay it out of pocket. Okay, so now what about this? We have two slides here. One that sort of lists the insurance that an owner should get, and the other one that lists the insurance that the corporation should get. And the beautiful sort of drawing you see at the left of your screen comes from Insure I, and I got to tell you that they have amazing articles on their website. If you have questions about insurance and how it works, good source of information. But help us, Tricia, understand what kind of insurance an owner should be getting.
Certainly. So as you see in this condo tower arrangement, we've got the information, the highlighted sort of pink or salmon colored block there, which is considered the unit. And then you've got all the blue outside, which would be considered condo responsibility. And they've got that in their little legend up there at the top. So within that pink or salmon block, we've got betterments and improvements. So this would be considered under the property. It will look like property, but it'll be a line that's for betterments and improvements. So this is anything above, if you have a standard unit bylaw in place, this would be anything above that. So if builder's grade, cabinetry and flooring is all within the standard unit description, this would be if you have put in laminate flooring above carpet, or if you have put marble countertops in. These need to be covered by the unit owner policy, because in the event of a claim, the condominium corporation is only responsible to put back the standard unit, which is likely not what's still in the unit. The other one is third-party liability. We've got an issue here with our slide. Looks like we've got a duplicate. One of these should say contents. You need to make sure as a unit owner that you've got contents coverage. Contents being anything that is not physically attached to the unit. We are talking about your clothing, your furniture, your personal items, but also important to note your appliances. Appliances are also considered to be contents and are the responsibility of the unit owner under the contents coverage. Third-party liability will be if you cause property damage or if someone is to be hurt within your unit. This is not outside the unit, this is strictly inside the unit, okay? Deductible and loss assessment. So when the condominium has a loss, and depending on who ends up being responsible for the deductible for that loss, if that were to fall on the unit owner, then this would be coverage in place for that. So the condo corporation has a loss, the unit owner is assessed the deductible amount. That unit owner is going to go to the unit owner broker or policy and say, I now am responsible for this deductible, and they would pay a smaller deductible in order to have that coverage triggered. Additional living expenses. If the unit needs all new flooring and all the contents need to come out and the unit owner needs to vacate the unit, definitely an important line to make sure is on the unit owner policy's additional living expenses. And the line item and the amount of coverage is important. Make sure that this amount isn't just standard and thrown on to the policy. If you live in a lovely, nice condominium that has in-suite laundry, you want to make sure that the amount that you're going to have allocated to additional living expenses, should you need to move to an Airbnb or a hotel, they have all those amenities in them. So have that discussion with your broker as well. And then the locker, we see it down at the bottom left here. Don't forget about the contents within the locker. The locker itself may be the responsibility of the condo corporation, but what is inside is not. So it's important to make sure that if you have a locker or a storage space allocated to your unit, that the contents inside are also covered. And sometimes these are high cost items, bicycles, etc. So
okay, so all of this
unless you have questions for me.
No, all of this is what the perfect insurance that an owner should get, and a corporation can't impose that on the owners. I mean, it's up to the owners to do what they have to do to make sure they're properly protected, but that's the responsibility of an owner. Now I'm going to move to the next slide, and I'm going to change this slide. I'm going to correct it. It should be betterment, improvement, then content, then third-party liability, and so on. Now, this is the insurance that the corporation must get.
Yeah, so we're talking about all of those things in blue on the diagram there. So the common elements, which is it's going to be all of the things that the condo is responsible. We're talking about roofing, elevators, the landscape, the underground parking, but it's also for the standard unit finishes. So that standard unit bylaw, if your corporation does have one in place, that will set out what the condominium corporation is responsible to repair following an insurable loss. And that could include, like I said, builder's grade cabinets, et cetera, depending on what exactly is in the standard unit description. So this is the bulk of the policy, right? This is where most of the cost of the policy comes in. General liability. So this is where this is the coverage for anyone if there's bodily injury or property damage. This is third-party coverage, so this is not the corporation itself. This is for anyone who comes onto the condo property. This does not include what is property damage or bodily injury within a unit. This is everywhere else. Boiler and machinery, not all corporations require this coverage, but if there is in fact an elevator, if there's a swimming pool with pool equipment, if there's an air makeup unit, those corporations do require boiler and machinery coverage. This will ensure that should there be a loss and there's a piece of equipment damaged and therefore there's a high, lots of property damage associated with that, that it is covered, and it is separate from property, which can be confusing for some people.
So we're falling behind schedule, so you're going to have to summarize very quickly the next two, and we need to move on because I'm going to run out of time.
Well, we've got two directors and officers liability here, so I can just talk really quickly about them. So this is the directors and officers liability is for an alleged failure to act in honest and good faith on behalf of the corporation. So the directors are doing a good job of making decisions on behalf of the condo, but should there be a financial hardship or an alleged financial hardship on behalf of the owners or an owner, this is protection for the directors for that.
Okay,
and I'm
so
done. We can move now.
I will correct this slide as well. It doesn't matter how often you look at it. Okay, so I'll correct that. Thank you so much. And just I thought I would share some very brief results from our survey, but again, I'm going to sort of drill down after this webinar and we will share like much more details. But on average, for those of you who did take the survey, we found out that the average insurance premium in Ontario for the corporation appears to be between $20,000 and $50,000. The highest that was reported in our survey was $236,000 and the lowest was $5,000. I suspect that that may be a common element at Condo Corp. I'm not too sure. So that was the first one of our questions. What's your insurance premium? And the other question we had, what's your deductible? And again, that's the portion that the corporation will have to pay out of pocket. It's not paid by the insurance provider. And so in the average in Ontario, average deductible in Ontario appear to be around $17,000. The highest that we got as part of our survey is $100,000. So there's at least a corporation. In fact, there's quite a few corporations out there that have a deductible that's $100,000 to $200,000 even. But the highest we got in our survey was $100,000. The lowest we got was $2,500. And then you see it by region. But again, I'm going to drill down on this later on at the end of this presentation. Okay, David, I'm going to turn to you. Give us the 101 here of who pays for what when a unit gets damaged.
For sure. So this section is going to come with a major caution. This is very high level and very 101. A lot of the questions we get are something breaks, whose fault is it, who has to pay? So here are the default rules, and you always, I mean, you got to look at everything in conjunction altogether. You got to look at the default rules, your declaration, whatever existing bylaws you have, and try and figure it out to get your proper answer. But under Section 90 of the Condo Act, the basic default is owners maintain their units, corporations maintain the common elements. And under Section 89 of the Act, the corporation shall repair units and common elements after damage up to the standard unit and subject to the declaration. So the declaration can modify that. And when we're talking about damage, we're talking about an insurable event. So it's not just any damage, it's an insurable event. The declaration can, as we said, alter the obligation to repair after damage. That's found in Section 91 of the Act by either imposing on the owner the obligation to repair the unit after damage. And we also have to keep in mind the limit that's put in there at Section 123 of the Act, where there's such substantial damage that it would result in more than 25% of a replacement cost of the condo. That kind of it throws out all the rules right there, and it's just a termination of the condo essentially.
Right. So, and this is, I guess, maybe the starting point, the most important sort of building block to this discussion today. And it's a bit shocking to me when I first got involved in condo corporations. If a unit gets damaged as a result of an insurable event, the corporation, that's the default setting, the corporation has to go in and fix it up to the standard unit. And I mean, to me, initially, that was like witchcraft. Like, what is that? How is it that suddenly I don't have to insure my own stuff? I turn to Big Brother. And so, but as David said, this default setting can be modified by the declaration. So the declaration could shift onto the owner the responsibility to repair a unit after damage. So you need to look at the declaration, as David said, you need to look at the legislation, and you also need to look at the very specific of the instance that you're faced with. Okay, so that's the default setting. What about who's responsible to pay the deductible? So if there's going to, just to put it in context, so my unit is damaged. Let's say it's going to cost $50,000 to repair. The corporation has to come and help me. The deductible is $25,000. Who gets to pay that deductible portion?
So the default setting is a deductible is a common expense, i.e. payable by everyone as part of their proportionate share to the their common expenses. Again, unless damage results from an act omission of an owner, and the damage is limited to the unit, or that if the corporation has an insurance deductible bylaw, which many corporations do, that might extend the circumstances under which the deductible can be added to the unit. So again, this is a very, very cogent example of where you can't just rely on the default provision saying, deductible is always a common expense. Very, very often it's not, and you really have to look at the facts of it and see who's actually covering the bill at the end of the day.
Okay, so going back to my example, my unit gets damaged. It's going to cost $50,000 to repair. The default setting is the corporation comes and fix it, but the first $25,000 would normally be absorbed by the corporation, which means all the owners get to share in the glory of my deductible. But having said that, one of the exceptions under the Act is if I'm at fault and the damage is limited to my unit. Okay, so that sort of sets the table for the next installment of this presentation. I'm going to go back to you, Trisha, and to Stacy. So now that we understand a bit how that works, help us understand the renewal process behind the condos insurance. Trish.
Sure. Well, I can just start. We like to start 120 days prior to renewal. So certainly we do not want this process to start happening immediately before renewal or before expiry. Does not give the corporation enough time and the broker enough time to research the market and paint the best picture that we can for the corporation. At 120 days, we'll start looking at what has taken place since last renewal. With a broker, they should be on top of what has in fact happened, but we look for the major updates that have been completed. The insurers want to know, has the roof been done recently? If there's an updated reserve fund study, claims, et cetera. And believe it or not, it's important whether or not there are a majority of rentals versus unit owner occupied. And we like to have these renewals out for boards to review at 60 days. Now that is in a perfect world. COVID and the hard market is making that extremely challenging, as I see Stacy nodding her head. And with that, I'll pass it to Stacy.
So Stacy, this is really a joint venture. Like, I mean, the corporation has to do its due diligence. You have to do your part as a manager. Your broker has to do it. So from the manager's perspective, how do you tackle renewal process?
Yeah, that's Trisha. Thanks for saying that. In a perfect world, right? It's I think with the insurers, one less of them over the last few years, and the tightening of everything, and premiums kind of going up. We've definitely seen a shift over the last 24 to 48 months, where we used to ideally get. We'd love to start it at 120 days, and especially in those circumstances where boards may want us to get another proposal, so not just about a renewal. I think I tie them in together. Renewals are, and I don't want to say they're easier, but they are. If you're happy with your insurance and there's no huge increase, then it was running tickety-boo, so to speak, over the years. But what we've seen over the last 2 to 3 years is that that's not the case. Premiums have skyrocketed from 20 to 100%, without claims on 15-year-old condos. So the renewal process has been really stressful to some. And it's really about the communication with the board members understanding. So for all of you watching today, if you are a board member, I'm sure you've been in it. All management companies are the same, right? We're going through the same thing, as is the insurance broker as well. So whoever you are with as a broker, hopefully they are flexible and able to provide you a proposal more than 30 days. But what we're really seeing is the brokers are really only giving us 30 days within that renewal period. And that's certainly not enough time. So ideally, yeah, 120 days would be like a Christmas miracle, you know, but really we're struggling to get a proposal within that 30 days even. And we understand it's, you know, it's hopefully the boards can understand, we can work together through this and understand really the reasons for this.
Okay, and one of the questions that often comes up is when to make a claim and when to self-insure. Tricia, can you
Sure.
shed some light on that? And I'm also going to turn to you, Stacy.
I think the most important thing is it's important that boards realize that you prepare your standard or your reserve fund study plan. You plan for all of those things that are expected. You plan for, you know, major repairs and replacements. And nowadays with the market as it is, you need to also plan for the unexpected. So budgeting more than just the premium. So if the premium is $25,000, you need to budget for more than that. So a couple times the deductible is when I would recommend making a claim. And if it's not 2 to 3 times the deductible, make sure that you're saving for, if your deductible is $10,000, make sure that that $15,000 loss, that the corporation has budgeted for that amount to pay out of pocket instead. Because right now with this market, making a claim to save $5,000 is unfortunately definitely going to impact premiums at least for 1 to 3 years. So.
Yeah,
5 years, maybe. Yeah. Go ahead, Stacey.
Yeah, I agree with you, Tricia. You know, it's just changed. You know, we used to be, okay, use $2,500 was the premium, was the deductible, right? That was the go-to. We're looking at 25,000 now as a minimum. And I think every condo should be there because it shows that don't easily use the insurance because it's not as easy to get insurance now as it was before. So you really want to budget for that. And I agree with you, 1 time or 2 times would be ideal if you can have that. And it's just good budgeting in general for the community, right? You can't, if it's $25,000 and you've only budgeted $25,000 and you have a claim, you know, and you're only going to do it if it's 2 to 3 times the amount of the deductible, well, you're looking at something, you need to have that just in case, that second.
Sure. So what I take away from this segment is that, and it all depends, of course, on what is the amount of your deductible. But I mean, if the claim is obviously within the deductible, well, that's, you don't ask yourself that question, you self-insure. But if it's 2 times or 3 times the deductible, that's when you start considering making a claim. Having said that, that makes sense when you have a deductible that's at 5 or 10 or 15 or maybe even 20,000. But if your deductible is 50, 75, 100, I mean, it becomes far more difficult at that point in time to self-insure. But what you need to remember is that when you make a claim, you need to pay the piper later on, and it's going to catch up to you. And so just keep that in mind, that not all claims are worth turning to the insurer. Okay, wonderful. What is this? I'm looking for, yeah, we're missing a slide. I'm going to make sure it gets put back on. But Tricia, can you maybe tell us what's coming down the pike, what's affecting, what are the pressure points on the industry right now? What makes the premiums go up? What makes the premium go down? And I'll make sure I add the slide.
So how to improve your situation, I think. That's what we were talking about.
No, not so much. It's my fault. I'm missing the slide.
Okay.
Tricia, do you remember yesterday or last week, we were talking about what's coming down the pike, what's impacting the industry. Do you remember that?
So I'm sure everyone's heard about the hard market, and I'll make it as quick an explanation as I can. For a lot of years, condominiums had a pretty decent rate with respect to property average, and unfortunately, the insurance companies, with the amount of claims that they're seeing come in over the last few years, they need to catch up. And they're doing that. Not only are they doing that to catch up, but they're also realizing that now with all the claims being made, that they're not making money. So that decrease, they're saying we don't want to cover as much property, so we call that decreased capacity. And then there's a lot of hoops to jump through in order to get coverage. So we're seeing it as you have to fit into a certain box in order to get coverage, which means you don't have any claims, your property is under 40 years old, you're not in any sort of flood mapping areas, and your property is protected, which means it's really close to a fire department or it has fire hydrants all over the place. So that's why we're seeing increases in rate. We are not seeing a lot of condos make claims, which is good. However, it's frustrating. A lot of people don't want to hear that. Why do we have insurance if we don't make claims? But unfortunately, that's the only way that we're able to sustain coverage, maintain coverage, and not have to go overseas to get coverage, which is going to cost an arm and a leg, for lack of a better term.
Okay, so changes that are putting some pressure on the industry, the change of the flood mappings, that's one of them. New sort of building requirements and building sort of codes. But I guess one of the good news, a recent good news in the insurance industry is the changes that have been made to the Occupiers Liability Act. That's Bill 118. Can you give us a quick snapshot on that?
Sure. So Bill 118, effective just this January, it has changed the requirement for a claimant that is claiming an alleged slip and fall. It is changing the requirement they no longer have 24 months to report that claim and to submit notice of claim to the condominium corporation or to the property owner in general. So now they're given 60 days, which is fantastic, not only for condos, but it's fantastic for the contractors that are servicing condo corporations, because their insurance is going up. They're finding it very hard to get coverage, and ultimately their premiums go up, and that dollar value goes back to the unit owners in their condo fees. So we're quite excited for condo corporations and contractors who work so very hard to keep the property safe, that now those corporations have only 60 days to be concerned. If there's a claimant coming forward, it's only within 2 months, and the condo corporation and the insurance company isn't prejudiced in missing information or documentation that they may need. It's very, very good, very exciting.
Okay, perfect. Back to the regular program here, and I'm going to turn to you, Chuck. And obviously, I had a problem with my presentation. I don't think I had the final version in front of you tonight, but that's the one you'll see on our website. I'll make all the corrections. It's going to look amazing. Chuck, I'm turning to you now. Chuck is a director with 882, OCSCC 882, and you had to look into cost-containing strategies with respect to insurance. So how did you tackle that?
Right. So we actually did it at the front end. We took over from the developer in 2012, and in 2014 we had a hard look at insurance. It wasn't at that time a major cost concern to us, but we could see what was happening more generally around the industry, and we could see that it could become something. So we tried to act a little bit more proactively to deal with it. Next slide, please. We're in the west end of Ottawa, by the way.
Right.
So I'll just talk very quickly about our experience with insurance costs over the past number of years. And then the main elements of our cost containment strategy, which are the insurance bylaw or the insurance deductible bylaw, the standard unit bylaw, and some other practical risk identification and reduction measures. And I'll be happy to answer questions sort of later in the evening if there are any. Next slide, please.
Oh, there it is. Okay.
So this is the profile that we have experienced over the past sort of 8 years or 8 or 9 years. Our insurance costs have essentially flatlined from about 2013 through to 2019. We passed our standard unit bylaw, which is a bare box or bare bones standard unit bylaw, in 2014. And we had prior to that, we did have a fairly large damage claim. Didn't significantly affect our insurance, but would certainly, if it was repeated, was going to have a significant impact. And then just a year or two ago, we had another large one, which because of our bare box standard unit bylaw was not covered by our insurance, but rather by the unit owner's insurance. Now we have in the last 2 years experienced fairly steep increases, but those are industry wide, and I'm sure every condominium corporation in Ontario, if not wider, is getting those sorts of general across the board increases. So we in 2012, insurance was about 3.8% of our total operating budget, our total condominium budget. And even after 2 years of fairly steep increases, it's now 3.7% of budget. So we continue to, in our view, have insurance costs under control, and we're quite happy with where we are right now. Next slide, please. So the insurance bylaw was handed over to us by the developer. And in our case, unit owners are responsible for paying the insurance deductible for anything anything related to damage in their unit, regardless of cause. And it also makes them responsible for the deductible for claims resulting from actions of a unit owner. So we have fairly comprehensive onus on unit owners in terms of their responsibility for the deductible. And our deductibles are as shown here. So we're not having our deductibles jacked up by our insurer, primarily because we're not filing claims. Sorry, yeah. So the purpose of this, so the purpose of the bylaw is to keep our costs down as a benefit to all the owners as a collective.
Okay, and so you had already in your books the insurance deductible bylaw that was provided by the developer, and so you already had a mechanism in place to be able to shift to the owner in certain circumstances the cost of the deductible if there was going to be a claim, right? So you had that already. Okay, yeah. And what about the standard unit bylaw?
So the standard unit bylaw, we were fairly early in the Ottawa market going to a standard unit bylaw. And we're quite happy that we did. So what it does essentially is it makes the corporation responsible for insuring the things the corporation owns, and it makes unit owners responsible for insuring those things that they own. And it's really designed to take advantage of the much more competitive nature of the homeowner insurance market compared to the commercial market, where we as a corporation have to go fishing. And this was a complex conversation with owners, I will say, but at the end of the day, a substantial majority of owners voted to approve this bylaw.
Okay, and so the bylaw that you have, the standard unit at your corporation is the bare bones or the bare box one, which means that anything within that unit has to be insured and repaired and maintained by the owner, but the corporation will always ensure that there's a place for that unit and will always ensure connections to common services and so on and so forth. So really what's in the unit is owner responsibility, right?
Yes, and in fact, that was a big selling point with a good number of our owners, that they were no longer going to be having their condo fees go to the insuring of units, regardless of how careful other owners were. So in our case, we were eliminating a risk to our owners that their insurance costs through the common policy for the corporation would go up because of the actions of other owners.
Okay. And finally, I think this is your last slides.
So this is very quick. We're tackling the issue, the risk of water damage in our facility. We are in the process of negotiating the replacement of rental water heaters. Those are part of the unit, and there was the responsibility of the unit owner, but we are, as a collective, going to have them all replaced as a single exercise. Same time, we're replacing washing machine hoses. Again, despite the fact that that's really an owner's responsibility, we're doing it for the benefit of the corporation. and we're also trying to keep on top of plumbing issues. And we've recently, in terms of fire protection, replaced all the unit smoke detectors, which again were something that technically was the responsibility of the unit owner, but we did that to get everybody up to the same standard.
Okay, wonderful. So these were precautions taken by the corporation, and you sort of took over something that you would normally expect an owner to be responsible for, but you did it collectively, and that sort of mitigates or reduces the risk of the fire or water damage or et cetera, et cetera. Okay, wonderful. Anything else? Yes.
These are the big ticket drivers of insurance
Right.
cost increases, so we were tackling them.
Right. Stacy, I think you had a question.
Yeah, I just have, I just thought of this with you doing that. That's great proactive risk management check on your part for the corporation. Wondering legally, once the corporation endeavors to replace machine washing hoses, for example, then it's really essentially, would you say, taking the responsibility off the owners from that moment forward?
No, go ahead.
I'll defer to the lawyers. We don't see it that way. And we're not selling it that way to owners. The owners will retain responsibility for ensuring the proper maintenance of their facilities, of their belongings. We're just providing a common schedule of replacement and facilitating that replacement at a collective expense.
Right, that's exactly it. And at the end of the day, your rules can also put some certain sort of restrictions or limitations. So with a rule, you could, for instance, ensure that all the water tanks are replaced, every 10 years. You could expect or impose on the owners the obligations to have proper braided hoses from the machines and so on and so forth. So all that Chuck has provided there was a systemized program that owners could opt into. Okay, wonderful. Graham, we're running out of time, but I want you to give us the good, the bad, and the ugly on the insurance deductible bylaw.
Okay, yeah, and I will be very quick and cognizant of time here. So as David explained to us earlier, he gave us the default setting under the Act as to the corporation is usually paying the deductible unless the damage is restricted to a unit and it's caused by an act of the owner or an omission of the owner. And as Tricia explained, we're seeing deductibles rising, we're seeing premiums rising, and as claims continue to come in, that's going to continue to go up. And so if we could go to the next slide. One of the things David told us is that the responsibility to pay for the deductible is something that you can modify by way of a bylaw. And so that raises questions like, okay, well, what if a negligent owner, like, someone like Graham, who maybe once fell asleep in a tub while it was running? What if something like that happens and it causes damage to his or her unit? Or what if that damage then spreads to another unit? Or worse even, what if it spreads to another unit and common elements? These are questions that we need to consider. Who in those circumstances is it fair to charge the deductible to? And then the other question that often arises is, well, what if it's nobody's fault? What if, sometimes God isn't happy with the dishwasher and it strikes, and sometimes there's just a flood and no one could have predicted it and no one could have prevented it. So what do you do in that circumstance? And so what the insurance deductible bylaw does is sets out who's going to be responsible for that deductible cost in these events that I've described. And if you go to the next slide, it breaks down where the responsibility lies in various events. And again, I know I'm moving fast here, and I'm just doing so we can get to people who are more interesting than me. And rest assured, everybody, these slides will be available for you to download. But generally, at least the insurance deductible bylaw that we tend to recommend is one where the owner of the unit is responsible for the deductible if either they are at fault, or it's nobody's fault, but the damage was sourced from within their unit, like the dishwasher example I gave. And it sucks that it's not your fault, but at the same time, it sucks more for everybody else having to subsidize that cost. And in circumstances where there's no one to blame and the damage was not sourced from within a unit, well, what do we do then? And in that circumstance, our recommendation tends to be, and what we think is the most fair, is that the units who have been damaged have to share the deductible in that event. And again, it's one of those things where you got to plug your nose and pay the deductible, but you have to ask yourself as an owner and really as a shareholder in a corporation, are you really wanting to subsidize the insurable events that happen to other units? And
Right.
so Rod, I realize I went through that pretty quickly. So
I was hoping you'd do it en français, actually. I see that your
no,
slides are bilingual.
I haven't had any drinks yet.
Oh, okay. So I think I want to go over your three scenarios. So someone flushes rice down their toilets and they're clearly at fault. It would be fair for them to pay the deductible. And by the way, when we say we shift the deductible to the owner who's properly insured can shift that, can make a claim and ask their insured to cover it, their personal insured, right? So the first scenario, they're negligent, they flush rice down their toilet, they leave the bathtub running. That's perfect example. Second scenario, they're not really at fault, but they're at the source of it. Their dishwasher leaks. Who should pay for the deductible? What would be fair? And with this bylaw, we go back to, well, it sort of comes out of your unit, so that would be fair. The scenario that always triggers more discussion is, what if the damage to the unit is not the owner's fault and isn't sourced within the unit? So there's a pipe that leaks, there's the pool that leaks, there's the roof that leaks, or whatever it is. And so the damage is sourced on a common element. But at the end of the day, his unit, my unit is damaged, or my unit and Graham's units are damaged. And so the question then still remain the same. Who should fairly absorb that deductible in that case? And the bylaw we propose is such that it shifts the responsibility of the deductible to the owners whose units have been damaged. And that continues to be fair in the sense that you're going to get a new floor out of it. And it continues to be fair to the rest of the owners who had nothing to do with this incident. And why would they be subsidizing the deductible for damage that affected your unit or my unit, right? And so that's sort of how we approach it with our insurance deductible bylaw. But again, we're always only talking about the insurance deductible. And if an owner is properly insured, they have the ability to make that claim from their own personal insurance. Now,
Rod, I'm going to quickly jump in because one of the questions that I often get asked, and it's happening in chat now, is, so, I mean, what if the corporation is at fault? In the circumstance where, let's say, you live at OCSCC 666 and I'm your director, and I have been ignoring advice that, you need to make sure that you're pumping the drains. You need to make sure you're maintaining X, Y, or Z. And I refuse to. I don't want to. I want to cut costs, or I'm lazy, or what have you. What this bylaw doesn't do is give a free pass to corporations to ignore their responsibilities. That's not what it does. But what it does is, in circumstances where it's nobody's fault, but it's not sourced from within a unit, we feel that it's most fair for the unit owners affected to pay that deductible. And that's the reality for home ownership across Ontario.
Right. I think that's important to sort of go back to. That's how home ownership and home insurance works in Ontario across the board for anybody else that doesn't live in condo land. And so it's not sort of a witchcraft or an obscure concept to have owners insure their own units, right? It's kind of in line with that. But you're right. I'm glad you brought it up. The insurance deductible bylaw cannot protect the corporation who is at fault. If the corporation or the directors are at fault, then you go back to the corporation. Okay, next bylaw that I wanted to, in our survey, we asked people if they had an insurance deductible bylaw, and 46% of those responding said yes. I always am amazed when I get, I don't know. And so a big bunch of, most of our responders are, those who took the survey are directors. And I still have a pretty, this is like 32% of our directors out there don't really know if they have that. You may want to look into it. Okay. Now, the standard unit bylaw is the other bylaw we want to talk about. And I'm going to say this. Remember what David said initially. David said that the corporation is responsible to repair a unit after damage up to the standard unit. So the question then becomes, what is the standard unit? Now, if you include everything in the standard, if your unit includes all the finishes and all the bells and whistles that the developer gave to you, it makes a unit that is more expensive to insure and more expensive to repair. On the other end of the spectrum, if you have nothing in the unit, if you in the standard unit, if the standard unit only includes, such as Chuck's standard unit, when he was talking about the bare box or the bare bone, if nothing is included in the standard, all it means that each owner is responsible to repair and maintain their own units. And so when you look at that spectrum, as from the corporation's perspective, which one of the two is more expensive to repair and which one is more expensive to insure? Well, obviously the unit that has all the frills and finishes, that one is more expensive to insure and repair, and the other one that has less or none of these finishes is less expensive to maintain and repair, I should say, and to insure. And so the standard unit bylaw allows you to move the dial here. On one end you include everything, on the other end you include nothing. Just that's the example that Chuck had with the bare box or bare bone or structural bylaw. Now, in the middle of that range, you could include or exclude anything that you want. So some corporation, they find that the bare bones model is maybe not very palatable for their owners, and so they instead decide, well, let's remove the flooring. Let's remove the cabinetry from the standard unit. Whenever you remove something from the standard unit, you're basically shifting the responsibility to repair it to the owner and their insurer. Now, I will say this. If you approach the debate as an investor, right? If I was a shareholder looking to invest in a condo corporation, I would be far more attracted to the standard unit that is under the bare bones model. And I'd be more attracted to that because that corporation faces less risks, less costs, less surprises. So if I was an investor, I would prefer that. I realize that owners sometimes they kind of, it's a bit odd to them and they feel, well, gee, like why am I sort of responsible to insure my unit? Well, because you own it. That's why you're responsible to insure it. But at the end of the day, you need to come up with a bylaw that meets the needs and desire of your community. Now, the benefits of a bare bones or bare box standard unit is that it says here it reduces the collective insurance costs. I think it's more accurate to say that it keeps it under check. And I think the graph that Chuck showed us a couple of minutes ago like speaks volume to that. It will limit the increases more so than result in an actual decrease. You're not going to get a check from the insurer next year saying, oh, gee, you overpaid this year. It is more equitable as amongst the owners because every owner is responsible to insure what they own. If I want to have expensive finishes, if I want to have expensive floors, if I want to have expensive cabinetry, why are you paying for that if it gets damaged, right? So it's more equitable in that sense. It puts the onus on the owners to be more careful. If I know that I'm responsible to repair my unit after damage, I'm going to be more careful than if I think I live, in this wonderful land where, the corporation looks after all my needs and desires. And it also, if the bare box or bare bones bylaw, in my view, reduces the disputes between various insurers, because if you went and you went for middle grounds and you excluded the floor, well then the owner has to deal with the flooring, but the corporation has to deal with the baseboards, and the owner above, who's at the source of the damage, is also somewhat involved. You may have three insurers that are pointing the finger at one another. And I would say this also, it streamlines the process. If my unit is damaged, I turn to my insurer and I have a relationship with them and I have a contract with them and I call them and I say, okay, my unit is damaged, and they come in and they take care of everything. So to me, bringing the insurance regime closer to what is applicable to all the other homes in Ontario kind of makes sense. That's the bare box or bare bones standard. Okay, so that's for that. But again, as I said, both of these bylaws have to be voted on by your owners, and so you need to come up with something that makes sense, and you need to sell it to the owners. Owners need to understand the benefit to them. We've asked in our survey if you have a standard unit bylaw, and 79% of the respondents said yes. I mean, as you can see, a standard unit bylaw is very popular. But when we've asked them what's included in your bylaw, about 37% told us that everything was included in it, and about, let's say, 20% indicated that they had a bare box or bare bones in a standard unit bylaw. And in the middle, you see people excluding floors and excluding cabinetry. So when we say that everybody or a big bunch, 78% have a standard unit bylaw, the next question and the more important question is what's in your bylaw? And I'm going to say this about the group that has included everything in their bylaw. You're missing the point, in my view, of the standard unit bylaw, which is to reduce the cost and the risk to the corporation by allocating it to the owners who can insure at far lesser costs than the corporation. And whenever we present these bylaws to be voted on, what I like to do is I like to go and ask a couple of owners to give me the information about their insurance coverage, their personal insurance. And as you can see, these owners, you see their premium and you see it's because what you'll hear often, owners will tell you, oh my goodness, my own personal premium is going to explode, it's going to cost too much money. That's not accurate. In fact, and this is the odd part about this discussion, is that most owners are already insured, both to cover the deductible and to cover their unit. Everything in their unit. So the owners are paying twice and they don't realize it. And so that's the purpose of these two bylaws, is to just shift which insurer will come to the aid of the owner in case of damage. Okay, oh my goodness, that was so quick. I can't believe how quickly we had to do this, but we're kind of on time, I'm a minute behind schedule. So what I'm going to do is I'm going to go around the table again. I'm going to thank our speakers, ask you for one parting words of wisdom or one last sort of word of advice before we part. And after that, for those of you who still have time while your supper is cooking, I'm going to share with you, we're going to drill down on the results of our survey. And panelists, please stick around. I mean, I'd love to hear what you have to say about the survey and the results that we got. So going around the table, Trisha, you're a superstar. Trisha Barretta from Gallagher Insurance. Thank you so much for trying to help us, for helping us understand really all the moving parts of the condominium insurance and how it works. Any words of wisdom before we part, Trisha?
Words of wisdom, I think I would say, remember that your broker and your property manager are your allies, they are your teammates, and they are working, doing their very best to get the best possible result in renewal for your corporation. And open communication and transparency amongst the three is very important. Make sure that you have that conversation, you ask those questions, and you realize that the broker and the property manager aren't necessarily in control of the outcome, but they are doing everything in their power to assist.
Wonderful. Chuck,
thanks for having me.
Hey, thank you. Chuck Davies, president at 882. I got to tell you something. Our AGM is next week. People can run from the floor. If you have nothing to do next week, you can join our AGM and maybe we can elect you at our board of director. So thank you so much, Chuck. I really appreciate your input and your experience. Any words of wisdom or parting words before we go?
I've been looking at the Q&A in the chat, and there are some folks who have not had questions answered and are perhaps a little unhappy about that. My advice is to recognize that not all these questions have immediately simple, quick answers. And so maybe there's some way we can do follow-ups with some of you who have more, who would like more deep dives into some of these questions.
Right. No, and you're right. Unfortunately, we can't answer like very specific questions, but I'm going to have a look at the Q&As that came up and we'll see if there's a way to either share answers or maybe what we could do is pick the best questions and then reconvene the panel and maybe tackle some of these questions. We really wanted to give you sort of the, the base, the starting point. Okay. Thank you so much, Chuck. Stacy Kirk, First Service Residential. Thank you so much for joining us. This is the first time for you on this webinar. Thanks so much. Any words of wisdom before we part?
No, thank you for having me. It's great to see a board member and insurance participate with lawyers and management. I think is a great team. The parting words is a standard unit bylaw. Really, if you don't have one, or if you don't know if you have one, what's in it, look at it and either update it or get one for your corporation. And I echo Trisha's words too. Let's work together, right? Like it's all about working together. Absolutely.
Yeah, thank you so much again, Stacy, for joining us. And now our two favorite condo twins, Graham Macpherson, parting words of wisdom.
Yeah, it's kind of along the same lines that Stacy said. For any owners listening, it's important that you are aware of what your governing documents are. So I encourage you to check out if you do have a standard unit bylaw, if you do have an insurance deductible bylaw, take a look and really make sure that you do have adequate coverage on your end. And so that's something that you can talk to your broker with about as well. But just staying informed is certainly something that it's my word of wisdom.
Wonderful. Thank you so much, David Plotkin, condo lawyer with Gowling WLG. You have 15 seconds, Super Dave.
For sure. Now that we're all being ordered to stay at home and stay at home harder, even though we're all staying at home already, be like Chuck and start thinking about preventative measures that your corporation can take, or that you as a unit owner could take as well to limit your risks. I know Jason Reed has spoken a lot about the increase in fire and water damage that's happened with all these everyone staying home. So things to think about.
I think your neighbors have tapped into your Wi-Fi, David. There was a bit of garble there, but that's good. I think we made most of it. So our next webinar is Wednesday, May 5th. Info will be posted on Condo Advisor. When you click on this, you'll be able to register. If you have ideas of topics, if you have questions, if you want us to tackle something, please feel free to share those with us. And again, you'll need to register. In a couple of days, I'll set up the new registration link. So that's about it for us. Wash your hands, wear a mask, you know the drill, be kind to one another, and we'll see you in a month from now. And again, people, if you want to stick around, I will share with you our survey result in a minute. Take care. See you on the other side.